guys, and welcome to my YouTube channel. My name is Wanda Sundarasiweda. If you're new to this channel, be sure to subscribe. But if you're a returning subscriber, please ring that bell so that you get notified every time I post a video. As you can see today, I'm not alone. I am with Wanda. Welcome, Wanda.
Thanks.
Wanda also has his own YouTube channel, which I watch a lot. It's called Trend Traders. He focuses a lot more on trading or technical analysis of stocks. I really enjoy his YouTube channel. I learn a lot in stocks on that channel. So hence I decided to invite him on our YouTube so that we can also learn from him and what he's doing in his channel. So Wanda, just for my viewers to understand who they're talking to, can you please walk us or tell us who you are and walk us through your money journey?
Okay. Well, my money journey is not that long, but for me it's a bit interesting.
Yes.
So I started. I came to Pretoria in 2014 to continue my studies. I was coming from KZN. I'm from Newcastle. Then I came to do a qualification at UP, but now I was receiving a bit of a steep end while I was doing that qualification. So during the year 2014, I had read Think and Grow Rich. Then just before the end of 2014, I read Rich Dad, Poor Dad. That's where the story of most people starts. So the difference between the book is that with Rich Dad, Poor Dad, I was actually motivated to start doing something, building that asset base so that I can live from the assets, right?
Yeah.
So in 2015 January, I went to Standard Bank to speak to a financial advisor. The goal there was to open a unit trust account. So that went well. It's just that I knew what I wanted, but the guy, being a professional, he wanted to speak about my risk profile and other things that I need before I start investing. But then I started investing in unit trust at the beginning of 2015, and then sometime, I think it was October 2015, I actually saw a book, Financial Meal. So it was either in October or September edition, and then they had a special cover on Easy Equities. So now that's when I read about Easy Equities, GT247, Imperial Asset Management. Then Easy Equities grabbed my attention because at the time I didn't know anything about trading.
Yes.
So now I knew that there was Easy Equities, and also during my time investing in unit trust, I knew that the net asset value is determined each and every day, but during the day, the stocks, the share prices, it moves up and down. I wanted to also have exposure to those shares, not just to have exposure to them through a unit trust. So when I saw that edition that was covering Easy Equities, then that is when I opened an Easy Equities account. Then I started buying shares. Like everyone, I started buying either penny stocks or buying companies that I love. I mean, Easy Equities, they always say another easier way to invest is to buy the companies that you love, right? Then from there, I've been investing since 2015.
Oh, that's a while. That's a while. How long ago is it?
It's over 5 years. I think
yes,
now it's over 6 years.
That's amazing. That's amazing. Is that the reason why now you moved from investments? Because the time when you were doing unit trust and starting to buy shares, I believe that's where you were an investor. Like, what was the time where you moved from being an investor to start trading?
All right. Okay, I'm still an investor.
Yes.
that one has to be clear, right? There is a misconception based on how people interpret whether you call yourself an investor or a trader. So the simplest way that I always say, an investor is someone who uses their existing resources to generate more resources. In the context of the stock market, we speak of money. So I'm using my money to generate more money. So I'm an investor. What differs is an approach. How am I doing it? Because somebody else can buy a taxi and be in a taxi business. They're still investing. Some people, they buy livestock, they are still investing. Some people, they buy shares. And then some people, they trade shares. Then now it starts to differ. So but just to clear things in terms of the misconception, trading is part of investing. It's just an approach that you use to multiply your money. So yes, I'm a trader. I'm an investor that using the trading approach.
That's amazing. And I like your answer because it shows that you don't have to be either one. It's part of the same thing. The approach is just different. But my question then now would be, why do you now focus on technical analysis instead of fundamental analysis? I mean, understanding as a trader, technical analysis is very important. You need to understand those charts. But a lot of people would say, as an investor, you need to know the fundamental analysis. So what is the difference between fundamental analysis and technical analysis, and why do you focus on technical?
Okay, so I will answer this question based on my understanding, not using the
book.
dictionary
Yes.
definition of the terms. So to me, fundamental analysis, it means that going through the company financial statements, trying to figure out the finances, and then knowing what the business does. Because when we're in the market, we're buying shares from companies that do day-to-day business. So now you can try to find information, the sector, the company that is operating in, what kind of business they are doing, the management, is the business making money or losing money? So I classify that as fundamental analysis, right? I do use a fundamental analysis now recently, especially with stocks. But now to define technical analysis is price and volume analysis. What you are looking for when you use a technical analysis, we look at the price of the shares, not on the value of the company. Because with fundamental analysis, once we have all the information, you can try to determine the value of that business. Then you can compare the value of the business with the current share price. But with technical analysis, I'm just looking at the chart, not a graph. Many people, they call it a graph. It's a chart. I look at the chart it plots the history of that share price of a particular company. So the information that I can get there, the simplest form is the share price going up or down? But that is not adequate to tell me about the state of the business. It just tells me the share price. Is the share price going up? Is the share price going down? There are some advantages to using technical analysis, just as there are advantages
of using fundamental
analysis. There is no evidence that shows one is better than the other. I think it boils down to the person, what works best for them. There is, I think it's Karen Richards Karen, she's based in Cape Town. She actually uses fundamental analysis and technical analysis. There are people, whether they are traders or investors, who use fundamental analysis exclusively. Then there are people who use technical analysis exclusively. I tried that route. There was a bit of success with it, but because I was coming from a background of trading futures markets. So now if I'm trading the JSE Top 40 index, not the JSE Top 40 companies, the index is just points. So it's whether the points are going up or going down. There is no way that there is a management. Well, there is a separate company, JSE Group, but the JSE Top 40 index, there is no management. There is no profit that they want to make. It's affected by the economy, the companies that it is tracking. So now when I started investing in companies, now we have management, now you have business, you have strikes and everything that you have to deal with in the business. But technical analysis is price and volume analysis. Fundamental analysis is financial statements, understanding the business. From my perspective, there is no evidence that one is better than the other. You have to choose for yourself, and I chose technical analysis.
It's great that you help us understand that, because some people will say if you want to understand the value of the company, or if you want to invest on something, you need to at least understand what it is investing in, which, well, I believe is true, right? But at the same time, there are methods and there are books on this that guides you on how you can go about buying stocks based on technical analysis. I know Simon Brown was talking about it on his space one day with us, saying that he based his purchases on technical analysis. So I feel like if you are joining and you want to buy stocks, do what's comfortable for you, and you are not restricted to using one method. You can use either one of them. I mean, when I have my technical and my fundamental analysis done, and now I'm like, well, I kind of want to understand what the charts are saying, I go and I watch a trade trader to see if they've done a video on technical analysis, just so you know I can get that conviction. Okay, so there are different investment strategy, especially in the stock market. Some people prefer buying ETFs alone. Some people prefer to buy dividends paying stocks. Some are on the US market. How do you approach your strategy when it comes to investing in the JSE listed companies?
Okay, you see now that you put it in the JSE.
Not JSE, not
You're going
JSE,
to
stock
limit me a
market,
bit.
stock market, stock
Yeah.
market.
So the advantage of using technical analysis, because every security that is tradable, it has that price history. You can plot a chart of that particular security. So I can literally trade anything, whether it's shares, it's bonds, it's currencies, even though I'm not good with currencies, and the other products like coffee, orange juice, you can trade those things, right? So I look at my portfolio, the investment portfolio. Where do I allocate my capital? There's capital that I allocate for trading shares, just shares exclusively, and I do that on Easy Equities. But that's another thing that raises an eyebrow, because people then start to say, but Easy Equities is not a trading platform. Well, the good news is that Easy Equities hasn't asked us traders to stop using their platform. And then it's incorrect to say that it's not a trading platform, because it does not have a stop loss. From somebody who looks at the chart almost on a daily basis, yes, the absence of a stop loss, it's a bit limiting, because it means that I have to consistently look at the chart so that I know where the price is. Is the price closer to my stop loss or take profit? Then I can either open a position or close a position. But the presence or absence of a stop loss does not determine whether the platform can be used for trading or for investing. Yes, as long as I can look at the chart on the side, decide that I want to buy this security, log into my brokerage account, find that security, buy it if I have to buy it, or sell it if I have to sell it. It works for me. But Easy Equities, the South African Rand account where I buy shares, South African listed shares. I don't really buy ETFs on my South African Rand shares. I buy ETFs on the tax-free savings account. I take advantage of that account because it allows me to invest without paying tax. But even there on the ETFs, I still manage them actively. So basically, if you want to remove trader or investor, I'm an active investor. Because at all times I know how my investment are doing. I'm not the guy that says buy this, remove the app. No, I want to know what is happening and act based on what is happening. So it's the same thing with the ETFs. I will see which ETFs are on an uptrend, buy those ETFs. I understand that some people they prefer to invest in the general market or index tracking ETFs. I also have Satrix Top 40 in my portfolio. But if, for example, the JSE general is on a bearish market, I will definitely sell my ETFs. I don't do rand cost averaging or dollar cost averaging. On my Twitter profile, there is that thing on my bio, losers average losers. It's a quote from, I think it's Paul Tudor Jones. Basically, if I buy something and the share price drops, it's either I exit, but I will never add into that position. So it's the South African Rand account, tax-free savings account, USD account, but I buy more USD shares outside Easy Equities. I have an account with eToro. Because,
I know eToro.
I mean, when I started investing in the US accounts, Easy Equities had just started offering them. So sometimes you want to buy a certain company, you don't find it. So that frustrated me a bit. I understand that Easy Equities at the time. I think now they've got plenty of companies. It's easy to find a lot of companies. So then that's when I started trading some of the US shares on eToro. I haven't started investing in Australian companies. Because I mean, I'm an investor at the end of the day, so I look at my capital. I don't want to open an Australian account, then I put in $100 or 1,000 Australian dollars. I'm not saying that it's not enough for risk management purposes. It's better if you have a bit of a reasonable amount of capital so that you can set a proper stop loss. You don't want to buy too few shares that even if they double your money, it's insignificant.
You still don't have
but
anything.
At the same time, I also don't want to take too large positions. So at this moment, I'm just letting Australian market to do whatever it does. Oh yeah, I haven't invested in property. What is the property?
Easy properties.
Yeah,
yes.
because I wouldn't know where to set a stop loss with the physical property. Yeah.
Yes,
So,
yes.
but I trade everything, commodities. I trade oil, gold, futures market, S&P 500, Nasdaq, DAX. What else that I haven't mentioned? Okay, forex. I always say on my channel, I'm not good with forex, so I'm not trading forex.
Okay,
Yes.
okay. Yo, that's such a mouthful, right? It's you have an amazing investing journey, and I'm saying investing with underlined with underlined bold, right? So with trading comes buying and selling, and that maybe I think a lot of people who are investors or pro investors would say attracts a lot of tax. Right? How do you go managing that? That the money that you're making, yes, it makes money. The money that you're making is not eaten by the tax that you pay. Like, what is the balance there?
Okay, so the first thing that I want to answer, or the way that I want to answer it, is that we are all traders. Yes, we're investors. We are traders because we buy something at a certain point, and then we either gonna make or lose money, but we'll have to exit that position. Well, in terms of tax matters, you can pass the asset to somebody else. But when you sell, we bought Sasol today. 5-10 years later, you're going to sell it. You've concluded a trade, so you are technically a trader, right? But now, how does SARS view you?
Yes.
So, if you buy an asset, you hold it for 3 years. According to SARS, you are an investor, irrespective of how you call yourself. But if you buy an asset and you sell it in under 3 years, then SARS consider that to be a trade. Then they tax you based on your income tax bracket. But if you've held that asset for over 3 years, then you're going to pay a capital gain tax, which is kept at 18%. And at this moment, there's that exclusion of 40,000.
Which is good.
Yes, which is good because it helps. So now, how do I approach my trading?
Yes.
Personally, I don't worry a lot about tax, because my understanding is that for you to pay tax, you need to make money.
Yes.
If you don't make money, you
won't
don't
pay
tax.
tax.
If you make money, then you pay tax. So my goal is not, I would love to be tax efficient. I know Andre Bothma and all the other guys, the tax guys, they're going to whip me for this, but what is important to me is that I make money, as much money as I can make from the market, right? Once I've made that money, I get my tax certificate from my broker. Then SARS does their magic. Then I know how much I owe SARS. Then I pay SARS. Then I'm left with
your
money,
portion,
right? That works for me. You guys make sure that you speak to a tax planner and you plan accordingly, right? The reason why I'm comfortable with trading or selling shares in under 3 years is because my strategy is built around risk management. If I buy something at 100 Rand per share, I already said, before I even buy it, I have a stop loss to say, if the share price move up, great, I can hold it as long as it's moving up. But if the share price go below 100 Rand, for example, I don't know how low it can go. I don't want to hold something that will move from 100 Rand to 0 Rand. Then I keep on saying, but I'm an investor, it should work in 5 years, or I want to hold this company for 5-10 years. No, if that thing drops to 90, I'm selling it. You see, I'm just selling it. I realize that loss. Then there are so many ways that you can approach profit taking. For example, you can buy shares and receive dividends from the shares that you bought. It works much better if the share price is moving up, because you also get that capital appreciation. But the market does not always go up. The general market, it goes up. It has a positive bias, but the individual companies, they don't always go up forever. So now when I buy something, I look where the potential support or resistance level, because in this case, I'm buying something. I want to know where the next potential resistance level is. Once the share price approaches that resistance level, then I start to move my stop loss. That, okay, if the market reverses, I lock in those gains. Then obviously, according to SARS, once I dispose that asset, it triggers a capital gain. But if I bought something at 100 Rand, it goes to 150, then it retraced to 145, I close the trade. I have 45 Rand profit on that particular position.
Yes.
Then SARS is going to take his cut. I'm going to take my cut, but I'm not going to allow that position to come back to 110 so that I pay this tax. Yeah.
Yes.
So
So many things that I got from what you said, right? Firstly, I want to talk about the losses. You keep constantly saying, I would not allow my stock to go below, I think for you it's 10%, go below 10. And then you mentioned the word stop loss, right? I invested in Upstart, and I invested at the wrong time because it was, accelerating and everybody was talking about it. I was like, let me not let this ship leave me behind. So I invested in it, and it dropped down by about 70% in the last, 6 months.
Yeah.
Yes, in the last 6 months. And that started triggering the question of how much loss can you take, for me personally. Because maybe I've been fortunate because the stocks that I've invested in have been on 100% growth, so I never really got to ask myself that question. So that's when I started searching about how do I get my exit strategy, especially when I'm losing. How do I set up that exit strategy? I know you have already elaborated while talking about stop loss and all, but can you walk us through what an exit strategy is and why is it important that someone set up the exit strategy so that they don't lose 70% like I did with Upstart?
Yeah. No, I would put it like this.